Lunch of the Market. This episode is really fast and really short because it's OpEx Friday and we have tons of stuff to do. HK, June the 21st. There was about 10 lines in Lunch of the Market in which we said go out and buy the September 30s, and we showed you the open interest at the 25 and 30 strike. Those blew up. They went from 38 cents where we bought them to $8.40 where we sold them today. You're very welcome, although strangely enough, none of you have thanked us on Twitter. That's really rude of you. So we're going to take our gains that we got from the HK, which is Petrohawk. It got an acquisition bid from BHP Billiton. And we're going to actually take what we have off the table that's totally in the money and up huge and put back $100 of that. We're going to go out and buy the January 2012 40 strike call just in case somebody comes in with a competing bid. The bid right now is for $38 and change, so everything at 40 and above is trading for pennies. And so just in case, we're going to take some of the gains from the previous trade, which was a huge wild winner, and then we're going to apply those to the January 2012 40 strike calls in HK. Remember, when you make a speculative bet, you want to A, be willing to lose 100% of the bet you make. And then B, you want to make sure that the bet is big enough so that if it wins, then you aren't kicking yourself for not being a big enough position. The next thing that we want to do is talk about BHP, which is the acquiring company. We gave you the 90-95 mirror spread all the way out in November. Of course, what always happens when a stock makes an acquisition is that stock goes down. Of course, that's happening today. BHP is down by over $1 a share. So we're going out and adding to our November position, this time with the 80-85, totally in the money mirror spread. We paid $2.35, which of course means that we have room for 100% rate of return. We may actually at some point add to the 90-95, but for right now we'd rather stay in the money. So instead of adding to that 90-95, which we may possibly have to roll out, not sure, we should see earnings twice from BHP Billiton between now and November options expiration. Hopefully both of those are good. The stock should trade up back near its 52-week high of 105. Why would an acquiring company trade up after a good acquisition? Well, why not think about Caterpillar or eBay or any of those, any of the other companies that we've done a series on earlier this year about companies that we like that acquire other companies that we like. You essentially end up with, think Bucyrus and Caterpillar. We like Bucyrus, we like Caterpillar, we like them even better together. Now we're thinking we like BHP, we like Petrohawk, so together we like BHP and Petrohawk. So we're going to add to our position out in November, $2.35 for the 80-85 mirror spread. This options expiration has been absolutely terrific. The only thing that we've really done anything to was the SPY puts today. When the market jumped up huge on the open, we started buying back those out of the money puts that we were short in case the market rolled over. It then did. It threatened to go really negative, but never really did. So I would have liked an opportunity to lay out more puts that expire today, just further out. We didn't get that chance, but now our August puts are almost completely free. They are not hedged, and so we're fully prepared for those debt talks. If we get some selling early next week, we can sell the weeklies against it, and then make sure to go into August with nothing attached to your puts, just long puts for the August 2nd deadline. Thanks for joining us again on Lunch of the Market. Follow us on Twitter. We're going to give you last-second updates if we have to update any of our trades. We're getting really close on some of them, like Walter Energy's WLT. We're within a buck. JCI, Johnson Controls, CBT, we're within 50 cents. So there's a number of names that are going to go down to the wire. So follow us on Twitter for the best updates.